Good afternoon, everybody. Perhaps I will welcome to stage my fellow panelists, Jan Patrick Rüger, Pandox, Managing Director, Germany and Austria, and Head of Asset Management. Please sit. And Brian Battelle, who is Head of Direct Transactions Global for Activum Investment Management. Please sit down, gentlemen. So first, a presentation. I think it's wise when we talk about Europe, where Europe came from, where Europe's going to give a bit of backdrop and context on where we are. So I try to focus on, not on showing where the most activity is in terms of transactions in Europe, but basically look at capital flows. Where does the money come from? And where's the money going to, and how is it being deployed? That's basically the discussion and with the outset on Europe. So if you look at this thing over here, you will see that obviously we all know that the tariffs that Mr. Trump is putting in place, interest rates rising, skill sets, there's a whole long-term credibility of US market. It's all an insecure geopolitical tensions in many places in Europe all play a big role in how investment behaves. But if you look at the economic growth forecast, you will see that it's actually not that bad, because we see big rises also taking place. And if we then move on to, if this thing works, doesn't work, yeah, there we go. Here you can see even better how it's actually a pretty strong environment where we're sitting in. Logically, a lot of the capital out of the US is flowing into Europe, and you see Asian money also coming into Europe. And then the question is, Middle Eastern money, are there direct investments or are there indirect investments? And the direct investments are quite low, but the indirect investments are quite high. So the global capital sources, where is the money coming from? This picture is an interesting one, because you will see this is, by the way, all assets. This is not just hotels, these are all assets. And you see that 7 out of 10 of the top countries flow into Europe. This is what you see here. Capital sources, where is the money coming from? US still big provider. Canada, logically because of the tension with the US, it's flowing into Europe. United Kingdom is still, obviously through US money, through Asian money, a big disperser of capital, and so forth. Then, if you look at the standing assets, this is an interesting picture to see. Here you can see basically what the biggest, where the money is going through, which asset classes is it going to. You see INL, logistics, obviously logical with the increase of the internet, packages being sent around the world, there's a lot of flow into logistics. But the yellow part is hotels. And you see that hotels are actually, and have become, a very solid, growing asset class. Now, if you look at global capital fundraising, also here you see that, look at 2024 and 2025 Q1 to Q3 forecast, it is already surpassing, and it's going into the direction of 2021 levels at the end of this year. So there's more and more money available to be disbursed. From the previous slide you saw where it's going, and you see that hotels is actually in a very good spot. Now, where is the money going to? Another one to have a look at. If you look at, and if we start looking at the last year, you see that Europe has grown a lot, from 15 to 23%. But also you see that there's a more equal division of money where the money is going to be disbursed. It is quite interesting to see that the European share has been growing, and bearing in mind that the market share of hotels is growing, again, positive news. Now, on this slide, we can see that on the standing assets, again, this is general real estate, you will see that 7 out of 10 of the big destinations are in Europe. So Europe's in a good spot. Sector preferences, now we're going back to hotels. The yellow line is hotels. So here we see that hotels are on the rise, and it's actually a solid asset class, and it's becoming a more mature asset class. And this is something that we'll be discussing with the panel as well. What does that mean? What are the obstacles going forward that we have to look at? Hotels are growing, are steady, it's becoming more mature. People start understanding better how the mechanism of a hotel works. And in previous life, I used to run Colliers and in general in the Netherlands, and there I started to obviously have a look at all the other asset classes, and then you start looking at the fact that hotels are actually quite different in terms of their behavior than other asset classes, because it's not just a lease. You have to understand the operations better. That is why in the beginning, a few 10, 20 years ago, up till now, there's been an evolution in understanding the M&A nature of hotel contracts better. That is why, and the returns are obviously higher, that is why more and more money flows into hotels. Now, again, all asset classes, if you look at investment volumes, the last 12 months versus the 5-year average, also here you see that Europe is in actually a very good place. And you see that the United Kingdom and London are still leading the pack. You see that Germany is in a very good spot, picking up. You see France is lagging behind, I should say, because France is not really performing very well. You can see that very clearly. But also here, overall, a pretty good picture. Now, hotels volumes by sector, countries versus cities, left-hand side countries, right-hand side you see the cities. Also here you see that actually Greece is a very interesting, way ahead of predictions. It's a very interesting country to invest in. Obviously what you will always see, and I will sometimes compare Greece to Spain. Spain 10 years ago was behaving like Greece is behaving now. It's logically that owners think their property is worth more than the market actually thinks it is, so that has to level out, which will take a couple of years to settle down, and then you see transactions will start taking place in a faster pace in Greece as well, just like it happened in Spain, which is now a very mature market. And actually, I would argue, and we'll have a discussion on that, a pretty institutional market is actually becoming. So here we go. These are actually good markets to be in. Sweden also, you see Sweden is picking up a lot, so the Nordics are in a good place to be as well. And Brian is going to tell us a little bit about that because he is present with Activum in the Nordics. So thank you very much. This is a lead-in to the panel discussion, and let's go kick it off. Now, if I may open my... Thank you. If I may open my questions that I have prepared for this panel. If we look back, gentlemen, to the past 4 years, what are the biggest challenges and lessons learned? After COVID, the world has changed a little bit. Perhaps, Patrick, I'll start with you.
Well, I don't tell you a secret that the property value is very much determined by operator activities, right? And after the pandemics, we have seen that we were able to substantially drive rates and profitability, but also had to realize that there is a substantial shortage in the labor market. And all these incremental revenues, they were mainly eaten up by payroll increases, by energy costs, and by other expenses.
Costs have gone up.
Absolutely. Consequently, profit margins are shrinking. And also, if we own and also operate hotels, we mainly lease them out. But we see also that the rent coverage ratios are going down. And this is also, of course, a little bit risk, because we as a tenant, we are, of course, highly interested in having sustainable leases.
Yeah. So maybe if I go one step back to go a step forward again, Pandox is a company that owns 140 hotels across Europe. They recently bought the Dalata Group for 1.4 billion, 31 assets. So there's a large, but they typically operate on operational leases. So Activum owns about 31 hotels. They are private equity, much higher IRR driven, 15% plus, and where Pandox would suffice for 10, 12% returns. So there's a big difference in how these two companies develop, how they behave. So costs, as you just said, have gone up. Therefore, rent covers are under play. Does that mean that leases in Europe, fixed leases, are over? Patrick, or?
Yeah, let me take this. Yeah. This is history from my point of view, because we are only signing revenue-based leases with a minimum guarantee, because we would like to share the upside potential with our tenants, but also the downside risk. We are very active owners. And with the revenue-based model, we are of course challenging also operator activities in terms of top-line performance, market share performance, but we also help our tenants in various ways. So for me, the future are the revenue-based leases rather than the fixed ones.
Well, that's for you, but that's Brian. We're moving over to you. If leases, fixed leases are finished, and if we need to explain this perhaps to part of the audience, leases are something that were quite common in certain parts of Europe, mainly in the northern part of Europe. You saw a lot of leases. So in Germany, for instance, where Brian, where you're active with Activum, if leases are over, does that mean that there are opportunities for you when leases are broken? Is that something that you are looking for, whether you get distressed assets? Would that happen, do you think?
Yeah, we do actually see a significant opportunity in the German market where there's a lot of distress, and there are historically a lot of these operators, kind of white label operators who manage the hotels and who lease the hotels, and they're essentially, a lot of them are going into insolvency with very fixed high costs and rents that continue to go up with inflation, but revenue not keeping pace. So we are seeing a lot of opportunities to pick off individual assets or to buy whole platforms. We have one company based in the Netherlands called Odyssey Hotel Group, and we manage, lease and manage 25 hotels there, though the model has changed to very low base rents and then variable, so there's more alignment with the owners, and as well with examples like in COVID, we had 25 hotels. So the company we bought during COVID, actually, as they were distressed, had 25 hotels that were closed and no revenue, but they had to pay their rent. So that was an example of a mismatch that doesn't really work in the current environment. Right.
So Germany is certainly an interesting market for that reason. A lot of leases may not be continued. There may be some distress in the market. Most also on portfolios. I know that from experience as well. There are opportunities. What are the other countries where you see opportunities in Europe? For the audience here, the European outlook is our theme. What are the other countries that we see as opportunities?
Sure. For very different reasons, we like Southern Europe. I'm actually based in Madrid. We've developed and managed a number of hotels there. There's a continued growing international demand for Southern Europe and for Spain and Italy, where we like especially. Greece we like very much, but it's a lot more complicated, and we haven't quite developed the size to tackle that market. But there's a lot of old stock, well located, but it's kind of second, third, fourth generation, so there's a lot of shifting. They're not institutionally managed, and they're independent brands. So there's a lot of opportunities to rebrand, to put in smart CapEx, and to add operational efficiencies, and that's where we think there's a lot of opportunity.
I mean, to substantiate that with an example, you recently bought with Activum, you bought the Fairmont on the Costa del Sol in Spain, southern part of Spain. What is the rationale behind that acquisition?
That was a little different in the concept. There was a distressed owner who needed to sell. We actually had a long-term lease on that asset, and it had just signed it a couple years earlier. The hotel was being completed, and we basically participated in an open process. But there was a branded resident component that had not been sold by the developers, so we took advantage a lot of interesting upside in being able to market and sell the branded residents while we ramped up the hotel. So that was more of a distressed opportunity, private equity leaving the market. And we're seeing a lot of those opportunities in Southern Europe and Europe with private equity funds maturing from 10 years ago and needing to bring back capital to their investors.
So a very opportunity-driven decision basically presented itself. You took it, and you're probably going to invest a little bit in the property and make sure that it goes back to glory where it should be.
Yeah, we had to come in and actually finish it off. It wasn't quite finished when we bought it, and so we have a development company, and we finished off the hotel and took all the ramp-up risk, of course. And yeah.
So Patrick, going back to you, maybe an interesting platform acquisition that you did is the Dalata Group that you bought. Just said it, 1.4 billion euro transaction, so quite sizable, 31 assets. What is the rationale behind that acquisition?
If you look at the landscape of hotels, we very much like Central and Northern Europe. This is where we actually came from.
Stable markets.
Absolutely. And the UK, so we stick a little bit to the tried and tested. We like the market we already know, we have experience. We bought the Juris Inn portfolio back in 2017, leased it out to Leonardo in the UK. We bought a single asset like the Queen's Inn Leeds, a DoubleTree in Bath, Hilton Belfast, just to name a few. So we very much like to invest in the markets we already know, I have to be honest.
Yeah, so risk averse, that's why you're happy with 10 to 12% IRR. So
calculated risk.
Makes a lot of sense. So in terms of, we touched on a couple of topics already on where the opportunities are, but if we're looking forward, what, in your opinion, Brian, in the next couple of years will drive deal flow?
Yeah, as I mentioned a little bit before, what we're seeing, it depends on the market, but certainly in much of Europe, it's the private equity investors who came in the funds kind of in the 15, 16, 17, where they have to recycle capital and they're getting pressure from investors to return funds. They're getting to the end of their fund lives or even past it, and they've been holding on to improve. So we're seeing a lot of interest there, opportunities from there. And then also in markets like Germany, which is traditionally one of the heavyweights of Europe, there is a lot of distress. So there's more margin pressure where there's very tight margins and loans are coming due. There's some pressure from high leverage, that they were taking 70% plus leverage in that market. Interest rates went up, so we're seeing a lot of opportunity there, both on the operator side, but also on the asset side. We bought 4 assets in the last 12 months in central cities in Germany to clean up and reposition and flag.
Yeah, so there's fund maturity, there's distressed. The quality of hotels, does that play a role? PIP, is that something that's a word, Patrick, you're shaking your head, what is your view?
I mean, if you look at our own operations, they are all branded with franchise agreements, and if you see the brands asking for property improvement plans to meet the brand standards, this can be an issue for some operators.
Yeah, is that sometimes not a risk? Because we just said that costs have gone up in Europe, and therefore rent covers are under pressure, which incurs financing challenges, I would say. So if that's the case, and the brand standards demands, are they not becoming some sort of an enemy?
No. We are a very self-confident owner, so if brands ask us to do certain investment, we ask ourselves, is it really relevant? Does it make sense? Or is it even not within our investment cycle? And then we also deny and have serious arguments with the brands. But in general, I wouldn't say that the brands are enemies. In an ideal world, they help us really driving top-line performance.
Yeah, and they still are very reasonable and respecting the financial challenges that you're facing, are they? So if I switch to a different topic, so here in the Middle East, we have seen a tremendous growth of, for instance, branded residences. They attract a much higher return and a much higher pricing, basically, when you sell, when you lease, than anything else. Is that something that we see happening in Europe, and is that something either of you would be interested in investing in, right?
Yeah, I mean, that is an interest of ours, because we also have a home building business as well in a few different countries in Europe, and we see that as a very natural progression, and almost almost essential for some of the larger luxury resort type opportunities we're seeing in Southern Europe especially, but also some of the capitals. There's quite a few small standalone branded residences going up in Madrid and some of the other major cities in Europe. And actually the Fairmont that we bought, that's near in the Costa del Sol and near Gibraltar, that came along with branded residences as well. So yeah, we see that as key to kind of the financial structure of developing in the future, offsetting some of those costs.
Jan-Patrick, do you recognize that as well?
Branded apartments are definitely here to stay, because it is a consequence of changing consumer behavior, especially from the millennials, where they look for more oriented accommodation. This is definitely the case. But I can also say that, for instance, in Europe, I strongly believe in affordable lifestyle hotels with focused service.
That's another trend.
Yeah, this is something where I'm absolutely sure that it's another trend which will stay, because people looking for getting a sense of place, getting a community-oriented accommodation, this is definitely a trend to look at.
So that brings us back, if that's another trend, that brings us then back again to optimizing returns and taking the benefit of perhaps distressed or other circumstances. Brian, do you agree with Jan-Patrick's statement on these lifestyle kind of hotels becoming a trend, and would you invest in it?
Yeah, I mean, we certainly do. We just opened an SLS in Barcelona, which is probably the largest hotel that's been built in the last 15 years, and it has 10 different F&B outlets. It's certainly not without its challenges, the whole F&B component. I think what a lot of brands have to get their head around is the whole integration of social media and community managers, and really integrating that with their own headquarter marketing between the hotel and the headquarters, because it's a real step change in the way that hotels market now, or need to market if they're lifestyle, versus in the old-fashioned way. So I think that's a big area that we are focused on and we're concerned about as part of the lifestyle.
Yeah. So it's all about experience. It's all about the consumer at the end. That's what we're discussing. The consumer wants the Gen X, Gen Alpha consumer wants a different kind of project. Does that mean that luxury is be shaking on their legs, or is that still room for luxury? Will that still grow as well? Jan-Patrick.
For me, it is either this affordable lifestyle, or it is ultra luxurious, because there will be also wealthy people willing to spend a nice rate premium on genuine, personal, private customer service. Yeah, so definitely.
I think we're seeing the evidence of that here in Dubai, you know, for sure. If you see the amount of hotels, and also here in the Jumeirah complex where we are, one hotel is opened after the other and is breaking records. So yes, I believe that you're very right on that. Last one, are there any other trends that we see that we missed out on? So you have the branded residences, you see the experience lifestyle. Is there any other hospitality form where you can adopt that to existing hotels?
Yeah, I mean, we're investing in a new area. It's not as sexy, but given what we've talked about with a lot of the labor pressure in Europe and the labor costs, in Germany, for example, we've been buying city center hotels and converting them to more tech-forward platforms. There's maybe 10 different names, but Sonder is one that's here, of course, that's well known. But also in Europe, there's other ones like Numa Stays and Lime Home and Bob W. And there's no employees. They're outsourced the cleaning. They're very good communication with apps. You go into your hotel with your codes, and you automatically enter your rooms. So that's an area where we're seeing these groups can get 60% margins and drive a lot of reservations directly without having to go through Booking.com, etc. So we're seeing some interesting potential there.
Cool. Now, if we switch to where we see the most opportunities ahead of us. So from my presentation, you could see that there's mature markets like Germany, like France. France is actually doing quite well in hotels, where the other asset classes are lagging behind, which is an interesting, where you see, obviously it's logical because France is still the number 1, number 2, number 3 destination in the world. But let's talk about Greece. Greece is basically outperforming, any forecast at the moment in terms of demand, in terms of capital available. Activum, Brian, you're present basically dominantly in Northern Europe, Germany and Spain. And John-Patrick, Pandox, same thing. Northern Europe, safe. What does it take? How long will it take before you guys start looking at Greece?
Well, a lot of our kind of opportunistic value add approach was putting in a lot of CapEx and development. And we always had, I think, a healthy caution about the Greek market is a little more challenging. A lot of the long-term operators we talked to, expressed to us the concerns about labor and working in that environment. The prices were really beat down post GFC for a long, long time. So that presented an interesting opportunity for some of the early entrants, and we missed that one. But I think that it's coming, but it would have to be lighter CapEx and not big development. And it's a bit challenging. The prices have shot up quite a bit, but I'm sure there's room to go.
Yeah, so the prices need to start, demand and ask need to come closer. And but from a maturity of the market, you see that that's demand for Greece, right?
Yeah, definitely. And also all the resorts and all the islands. Some pretty amazing opportunities.
So Pandox, you're much more conservative than Brian is. Come on, when are you going to Greece?
And we have to admit the Dalata deal is keeping us busy.
Well,
so integrating
how long
31.
Keep you busy?
Yeah.
No, it will do. But Greece is if I look at, broaden the question a bit, because Greece is basically leading the pack in terms of capital availability. What other areas do we see in Europe where we say, besides London, besides Germany, a bit of France, where do you see most growth coming?
Well, Italy has been booming, right? The major cities, Milan, Rome, Florence, and then Sardinia is doing very well. And I think, that's going to continue to attract a lot of capital. Certainly the Golden Visa product there helped drive. Milan is now, I think, is flowing into some of the other cities there as well. Yep. And that's one with this tremendous ADR growth, a lot of driven by Americans, of course.
Yeah. Is that something that's more, not as aggressive as Greece? Is that something a little bit more north as well? Is that something, so Patrick, Pandox would start looking at?
Yeah, definitely.
Really? Interesting. You must like pasta. So we're coming close to the end. Are there any questions from the audience, perhaps, for this distinguished panel? Gentleman's walking away. No questions. Any questions? Yes, in the back there. Who's that? I can't see. Is that Larissa? There's a microphone coming there. I think it's Larissa.
Hi, thanks for a very interesting session and panel. I have a question, Jan-Patrick. So, of course, Pandox, in terms of investment, it's a listed company, so you have a public market strategy. What is your view on sort of why as opposed to private market? What's the attractiveness and opportunity in Europe?
You mean in terms of hotel investments?
Yes.
Well, we have a long-term vision when it comes to a return, and together with our operators, we look really for long-term engagements and contracts. And this is for us the beauty, and this in combination with the lease contracts, which are still very common in Europe. And I think this combination makes us confident to look at Central Europe, Northern Europe, the UK and Ireland, because this is exactly where we can close those kind of revenue-based leases. And we can also play this active role as an owner, supporting our tenants with their revenues and their profit margins. This is why we are very focused on this region.
Yeah, and that obviously has the impact on the share price, which I can imagine will be your primary focus.
My private focus?
Or no, primary.
Protect your share value.
Yeah, absolutely.
Thank you.
For sure.
Yeah.
Thanks. Yes, sir. Gentleman here in the second row. Thank you, Mala.
Thank you so much. Mohammed Ibrahim from Bisgate in Dubai. Sustainability seems to be a very important aspect. I've not heard anything about it. I mean, of course, investment and the growth in Europe with, internationally known destinations like Spain. I think Cyprus has been really attractive as well. But I've just read recently that there was a plan for a big project in Luxembourg for 500 rooms, where the city have refused the project and they scaled it down. They said that there's a lot of impact on the environment. So how do you balance beyond the promise at the .com website for investors? What is your actual vision for sustainability for hotel investment in Europe? Thank you.
Yeah, let me take this because sustainability plays such a vital role when you work for a hotel real estate company from the Nordics. So we are absolutely keen on getting all our properties on BREEAM certification. For various reasons, has impact on green loans and what have you. I don't need to tell you this. So this plays a super important role. And of course also for our operated hotels, when we talk about BREEAM in use. The challenge we sometimes have is to convince the one or the other operator to follow our approach on sustainability. But this is the future. We're absolutely keen on getting this done and also convince our operators that this is the right way forward.
And if I may add to that, the consumers, the generation we're discussing, Gen Z and Alpha and beyond, will not stay in hotels if they're not adhering to a sustainability standard of very high standards.
And it's becoming a decision-making factor also when booking hotels. We already see it when we get big MICE inquiries for conferences and events. We need to inform the organizers about this, the carbon footprint. And I'm totally convinced the future will be companies will give their employees not only a travel budget, but also a budget on carbon footprint. This will be the future, I'm that sure.
So it's a big deal. Any other questions? Last one? Before we cut off, we're cutting into the time of the next panel. Thank you very much, John Patrick, Brian. Thank you very much.
Thank you. Thank you.